Hey, what's up? Welcome to DGenEd. That's degenerative education, meaning none of this is financial advice. Just me having fun looking at charts like the chart behind me, which is Luminar Technologies, ticker symbol LAZR, here looking at the daily time frame. Recording this on Monday, February 17th, so happy President's Day if you're in the US celebrating, got the day off work like I do, so, kind of nice. And so, anyways, Luminar closed on Friday, February 14th on Valentine's Day at a price of $6.45, being down about 2.25% on the day, but then bouncing a little bit, about 7 cents in the after hours, going up about 1%. And so, I wanted to go over the chart because I do think that we will be seeing a pullback, a little bit more of a discount before we see the next attempts to go higher. So I did want to go over that. Don't have any drawings up here because I wanted to break down, just what's on the chart right now before throwing them up there, adding some more drawings and getting into some data. Oh, and speaking of getting into some data, since we closed at 645, 5 cents below 650, I would imagine that the max pain for Friday was $6.50, but if we do flip over to Unusual Whales to look at the Luminar data, we can see that for February 14th, max pain was actually $6 a share, not $6.50, so we did close above max pain. So looking good in that sense. However, just looking at the pattern here, putting in kind of, a topping tail with that big wick to the top side, closing near the lows for the day, I think that Luminar could be seeing a pullback. And that's really supported in, what we're seeing in the max pains here for the next few weeks. Coming up for this Friday on the 21st, max pain looks like it's $9 a share. So, while that might make you excited thinking that, we ran up on Thursday here over 20% and then, put in higher highs here on Friday, hitting a high on the day of $7.37. If we got into the sevens, maybe we could get into the eights, maybe we can close on Friday the 21st above $9 a share. But since there's kind of a gap between the 14th's max pain and this upcoming Friday's max pain, I suspect we will likely be pushed a lot lower than that max pain, getting lower than 6, getting into the 5s. And so that is what I am prepared for. But then looking at the max pains following the 21st, on the 28th, max pain 6, and on March 7th, it looks like it's 550, and then we do have a couple more weeks of 6 before closing out the month of March with the max pain of 5. So, I think that when we get down to 550 for max pain, maybe price is closing above that. Maybe that triggers a little bit of a gamma squeeze, but maybe that's muted by the following max pains being a little bit higher. But then maybe by the end of March, if we're closing above $5, I think that we could really see some big moves to the upside then, but not just yet. And so that's why I wanted to dive into the chart. See a couple moving averages up here. I'll get into that in a second, but I did want to point out that the MACD over here does look like it has flipped green. So that is looking good, but I do think that it will be rolling over. We might get back into kind of this red zone, being a little bit negative before we see the next rally up. Looking at the RSI just above Ed's head, you can see that there. It does look like the RSI is at 53.51, so right around neutral, getting up to 70. That would be overbought. We're not there yet, but it does look like, our lows in that RSI are getting higher, so it is trending up. That is good, but like I said, I think we'll be seeing a pullback. And then looking at the volume, I'll look at this a little bit more critically when we do step back. But I did want to point out that, we saw this nice spike in volume on the 13th, showing that there is, volume behind this 20% move. But then after going higher, we saw a cool off in volume, a pullback, a lower close. So that does make me think that we will be seeing a pullback. And then also, if we do compare the volume from the 13th with the volume from January 31st, when we had, a little bit of a spike up, but really we just saw consolidation following that. So the volume on the 31st was 3.5 million, whereas over here on the 13th from Thursday, volume was only 3.17 million. So with the volume coming down as we're going higher, that makes me think that this is probably going to cool off. And one level up here, is approximately where I think it will be pulling back to. We do see in peach here, the 21-day moving average, which is at a price of $5.87. So I think price could be coming down to right around $5.90 before finding a bottom, seeing all of this consolidation over here, the wicks right around $5.80, those levels acting as support. Maybe we go a little bit lower, but when we get into these candles, I think that will be acting as support, maybe coming down to as low as where the cursor is, around 576, before starting to make the next attempts to get higher. We can also see here the 50-day moving average at $6.36. That is currently below where we closed the week at, but I do think that will ultimately be broken below, and we will be coming down to that 21-day moving average. But anyways, I am going to throw up some drawings that I had previously put up here. I will edit them a little bit, really I just wanted to kind of break down my thought process here. So since we did have this pretty big wick up on Friday, red candle day, pulling back, closing lower than Thursday's high with volume dropping down, I think that we will be seeing a pullback. I do think that the high from the 14th at 737 is a local top, and so that's why I have this Fibonacci retracement drawn here in white. I might actually make it, let's say, a lot thicker just for, when I'm talking about it so we can see it a little bit cleaner. And so looking at that, the base of that Fibonacci retracement is the low from January 29th. That was at $5.16. And the levels that I'm looking at with this, we can see it looks like the golden pocket here ranges from the 618 down to the 65% retracement. That is right around $6 down to $5.93, corresponding pretty nicely with that 21-day moving average at 587. So, lots of levels there. I think that we could be pulling back to them. And then there are some levels up above that around 610. I'll talk about those once we do take a step back. But if we do break below 587, if we don't hold the tops over here around 580 or so, we do have the 786 here at 563. I think that's probably like the ultimate low that we would be getting to, but we could be, putting in new all-time lows. But right now, what I have been seeing is that we are putting in higher lows, and I think that, this is looking good. But taking a step back, we'll talk more about those higher lows. I'm just going to make this retracement a little bit thinner so it's not too overwhelming there. And so taking a step back, we see this purple line here at $4.93. That was the low hit on December 24th. And from that, we have been putting in higher lows. I was just talking about the low from, January 29th. That was at 516. And so that's above 493. Higher lows, that is a good sign. We're also putting in higher lows with that RSI, so there's no divergence there, which would be bullish divergence, but putting in higher lows with the stock price as well as with the RSI. That's not bad news. That's just, there's some consistency there. And so, a level that I do want to add to this is just going to be a kind of a casual trend line going from that low of 493. I think I have to adjust that level a little bit and then just kind of intersecting that with the closes, not getting any closes below that line over here. So I'm just going to adjust the low so it is, in fact, at 493. I did miss that a little bit over there. Gonna lock, I'm gonna adjust this a little bit so it is, intersecting with the closes over here. So you can see that no closes below that level have been putting in higher lows. I'm going to make that line a little bit thicker, just leave it white so it does stand out there. And so, I would like to see us continuing to put in higher lows and coming down to that 786 around 563, that would still be putting in higher lows. So if we break below 590, if we get below this moving average here at 587, getting down to 563, I don't think that'd be a bad dip buying opportunity. And also, speaking of dip buying opportunities, I should mention that, I'm sure a lot of people are probably kicking themselves, man, I could have bought more. Below $5 a share, I am just going to wait for that level for price to come back to that before adding. But what I think we have here is that we're going to be putting in higher lows, and people waiting for $4.93 or $5 to get returned to, I think they'll get left behind. Or if we do break below that, that will be forming a spring. And, a lot of people will kind of be panicking, not wanting to buy the dip there. And, I think that would be a nice opportunity, but that would also be breaking this trend of higher lows. So there's also the risk there that this could continue to head lower than 493, getting deeper into the fours, maybe down to 420. And so there's some risk there with that. So I think what would be best is for us to continue to hold this uptrend, a pullback to 563. I don't think that would be that bad, but I am not expecting that. Like I said, 590. But if we do break below this, good to pay attention to the volume as well as the MACD and RSI to see if there are some signals there that a bottom could be in. And so I'm just going to continue with a step back. Actually, before I do that, though, I do want to go over this light blue retracement over here. So while we did break below the 786, which is at a price of $6.10, we are above that level now, and that did act as a little bit of support. We did get a nice little bounce here before ultimately breaking below that level, and then residing below it over here. And with that consolidation below that level, $6.10, maybe $6, that could be acting as support. So good to keep an eye on that level as well. And then if I take a step back even further, there's this yellow line that I've drawn there. That's at $6.11, and that is the 1618 from a Fibonacci retracement over here. We can see the full retracement coming back down to 1088. And then going beyond that to 611. So, I just wanted to leave that up there because I think it's pretty interesting that really in the range from 611 being the highest down to that 21-day moving average at 587. Lots of levels there, lots of confluence. And so I do think that that could be acting as a good amount of support, and that actually 563 may not get hit. So that might be, one to not be waiting for. Like I said, 590, I think that's a good level. And so talking about $10.88, so that full retracement back down to the lows over here. This, of course, will be getting back up to that level. With that having been, level of support over here, consolidation above that level, also getting a wick nearly up to that level on January 7th when we hit a high of $10.40. I think that getting back up to around 11 might be kind of tough. So good to kind of manage expectations with that, as we can see from this Fibonacci extension here. So going from that low that was hit on September 12th, being at a price of $10.88, also marked by this yellow line here. So that Fibonacci extension goes from that low up to this high and then down to the low of 493. And from that, we can see the 618 extension there at $9.70. That acted as resistance over here on January 7th when we hit that high of $10.40, piercing the $10 level, but then getting rejected from it. And also, we did pierce the 50-day moving average there, which was at, looks like 959. So, this is, the first time that we got above that level, but I think that this is going to be a fake out, getting a couple closes above that level. Maybe that sounds really good, looks good, but it actually suggests a fair amount of weakness, I would say, because, as we see the volume here corresponding with getting up to piercing that level, but getting rejected from it. We saw a good amount of volume there, but we have just seen that volume to continue to go down. I think that this is going to be a fake out breakout. We will be pulling back to 590, as I said many times. And then from there, then we might get an attempt to go higher. And talking about that, I'm going to draw another trend line here. So going from that high of $10.40 and then kind of just intersecting with Friday the 14th's high. And then I might draw this with the trend line that I had just drawn. And so from that, if I do make that a little bit thicker, we can see this nice wedge pattern that we are forming. And, I could probably move this lower because we don't have any opens above that line if I were to lower it. But really what I see here is that this will be pulling back possibly to test the base of this wedge around 563 before we get another attempt to break out of this. But like it does look like here, I think that we are getting rejected and we'll be seeing that pullback. And then just looking at some of these other levels to the upside, I had talked about 1088. That also corresponds with, from this extension, the 786, which is exactly at $11 a share. I think that is going to be a good level to be keeping in mind, as we might be getting rejected from there. And then I also have this green line. I might make it a little bit thicker, and that is based on the low from August 12th of 2024 at a price of $11.86 there. And so, that is just, we had this support there, and so that's going to be tough to break above. Getting just beyond that is the 100% extension at $12.65. Again, I think that it's going to be tough to be getting above and into the double digits, getting above 10. But once we do get there, we might find some resistance here before we get to this gap fill at 1470, which was the closing price on November 15th. Let's see, I'm just making sure that is right. Yeah, 1470. And also, you might notice this, I had talked about these moving averages down here. What we have up here, this blue line, that is the 200-day moving average, which is currently at a price of 1509. That would correspond with filling this gap here. So I suspect that there will be a lot of resistance when we get up to either that moving average or to filling that gap. I suspect that by the time we get up there, that moving average will be down closer to the 12s or the 11s. So I suspect that will be a rejection there. And I should note too, I do have the 1618 extension up here at 1742, but I think that is getting a little too far into hopium territory. So I'm actually going to remove that from the extension, so we're not getting our hopes too high. But I do have this gap marked up here at 2108. That was the closing price on August 6th of 2024. And so that's another level for us to be keeping in mind. But I think it's going to be taking some time before we get up there. And, like what's going on here with the chart here, it's all about time. Getting to up to $10.40 this year, January 7th. Lots of excitement there, but ultimately we got rejected. More excitement over here, but again, another rejection on the 15th when we did go higher, but then ultimately came back lower. Right around now, we did get up to around that level, so the closing price on January 15th was at $7.47. The high from Friday was $7.37. So putting in a lower high there with, as you might be able to tell down here, with lower volume. So there is still some weakness. We need to be seeing a pullback. But once we start to, make the next move higher, that could correspond with a breakout from this downtrend, but it also might correspond with another rejection before ultimately pulling back. And so I guess, what I could see happening, just talking about that, I'm just going to draw a little doodle, what I could see happening. So from where the price is currently at, I could see this coming down to, like I said, around 590 before forming a bottom, making another attempt to go out of this wedge to break out, but then ultimately getting rejected before now forming a lower low. which would maybe shake some people out, but it's still respecting that uptrend, coming down to the 786 at 563 before then, after having faked people out with that lower low. Then we get a move higher, maybe create a double top here that would also, shake some people out before pulling back to retest around $6 a share. I don't know why this stopped moving, so I'm just going to actually make that line a little bit thicker, and then I'm going to continue on with the drawing here. I guess maybe my time expired with it. Continue down to around maybe $6 a share before then breaking out to the upside. And with that kind of ugly arrow that I just drew there, with that we could see there is potential for maybe an inverse head and shoulders pattern there that, I think could look really good for the stock. And that would also, include pulling back, like I talked about, getting down to 590, getting rejected from the top of the wedge, putting in a lower low. Although in the bigger picture, that's still a higher low. So that might shake some people out because it's a lower low here. Then pulling back here, double top, gets people a little anxious, and then pull back, maybe to pull back even lower than $6. But I think something like this could be happening before a breakout. And one thing that I did want to mention at the end of this video, just coming back to unusual whales, is unfortunately the options data for Luminar is super, super boring. And, we have seen some selling of calls, some buying of calls over here. And actually the selling of calls, net call premium on January 27th came down by over $2 million. A few days later on January 31st, we saw net call premium going up by $1 million. But generally, those are some kind of, anomalies in the data here. Generally, what we see is net call and put premium is overall very flat. So super, super boring looking at the data here. But when we do start to see some consistent changes in the trend here, not just random days, but when we start to see more selling of puts, more buying of calls getting into the millions of dollars, then I think that could be suggesting that not only is a bottom in, which we may have seen back here around 493, when the bottom has been formed completely and we are starting to break out, I think that might be reflected in some unusual whales options data. So I'll be keeping an eye on that. And when I do see some of that stand out, I'll be sure to make another video on it. But generally, in the meantime, I think that a pullback to sub $6 a share is going to be a discount. And let's see, just getting a kind of a time frame assessment, getting to the end of that wedge. That would be, really just like 3 weeks from now, getting into March. So we'll have to see. I think that we might be seeing a breakout in the next few weeks, but there will still be some discounts between now and then. So that is what I am looking forward to, and I am looking forward to price eventually getting up to $11 a share, but holding above that level and continuing higher to fill these gaps, perhaps later in this year. But, anyways, as always, those are just my thoughts. If you found them helpful, make sure you like the video, share your thoughts in the comments down below, and make sure you subscribe to the channel for more videos like this. Thanks a lot for watching. Take care, you guys.